JSE is down more than 1% so far today, its lowest in over a month, marking the third straight session of losses. Resource-linked sectors were the hardest hit, along with financials. Khanyisa Ngesi is Absa Group Investment Solutions Head, and she joins us now to take a look at the latest market moves. Thank you very much, ma'am, for your time this afternoon. Let's start with an overview of how the local index and the rand are faring at the back of the week close in the previous session.
Sure, Dudu. So we did have a week close, but actually a very quiet week, starting off with very thin volumes on the market. And I mean, as you have highlighted, still in negative territory. The US dollar is actually reaching new highs this year, which is weighing on commodities, as you've also just highlighted. But this is on the back of a very hawkish tone from the ECB, which has actually weighed on markets, as well as later tonight, we are having a speaker from the Fed, Mr. Whaler. And tonight, I think as investors, we will be looking for any signs of a potential pushback on March rate hikes from the Fed. But I think something to take into account going forward into this year is a few of the known unknowns, which actually fall in two categories, which will be economic and political. I think we can all agree that forecasting economic and financial outlooks for any year is always difficult. We've seen a lot of surprises. For example, 2022 was a global pandemic. 2022 was Russia's invasion of Ukraine. 2020 surprise came in the form of the global pandemic. Last year in 2023, we had and continue having unrest in the Middle East. But I think what we can look forward to, if you could say, what would be the good news for this year going forward, likely to come in the form of falling inflation and widespread expectation of not only the Federal Reserve and other central banks, but particularly our central bank cutting rates during the year. Starting potentially later in 2024 as per our expectations as Absa. Unfortunately, we have had those attacks on the Red Sea, which obviously has impacts then on raising global trade concerns and potentially heightening any worries of any supply chain instabilities. And obviously that will have an impact on growth, not only locally but internationally as well.
So according to the latest F&B House Price Index, the weak house price growth trajectory is expected to continue in the near term amid heightened uncertainty. Talk us through some of the specs of the index and if Absa is seeing a similar trend.
Well, the F&B House Price Index recorded an average growth of 0.5% year-on-year in November from 0.4% in October. I'm talking specifically 2023. And if you look at what F&B themselves have said is that between January and September, a new mortgage volumes actually declined by 27%. And younger buyers, including first-time buyers, are becoming a bit more despondent. If we look at our home loan data, specifically our Absa home loan data, it actually shows the extent to which consumers are actually experiencing the negative effect of the cost of living. Home loan repayments have increased by about 40% since the start of the rate hike cycle in 2022. And if you look at, for example, in July 2020, the prime rate was 7%. It's reached 11.25% in March last year, where we saw 9 consecutive increases of as much as 75 basis points. But I think the interest rate hike is just one side of the consumer story. We saw rising inflation as the price of essential goods like food and petrol and utilities went up. And all of that further adds financial strain to the consumer, as well as load shedding. I mean, all of these things contributed to the rise of pressure felt by consumers. And us as Absa, looking at our expectations of interest rate cuts expected in the second half of 2024, this is positive. However, if you look at first-time would-be home buyers with regards to the consumers that we've surveyed for our index, they feel that renting is more flexible, it's more affordable, and it's actually less costly than owning a home right now, although they still aspire to own a home of their own. And they cite all the things that I've highlighted: the high interest rates, economic instability, higher cost of living, higher prices. These are some of the things that are hindering people from actually buying property. So even though there is consumer strain and it's likely to persist in the short term, I think home ownership will remain aspirational for many South Africans as conditions ease and more activity returns to the market.
Is it not all, Khanyisa, renting when you speak of home ownership? Because until you have that title deed, you're still leasing from the bank, no?
Not all of it. I mean, what you've seen as well is you've seen a lot of selling, and the selling has been because of a lack of the ability of servicing the costs that come with owning a home and maintaining thereof, to be able to ease the pressure on disposable income because of all the things that I've highlighted: rising inflation, rising interest rates, etc. So I think the pressure is coming in a lot at the initial first home buyer, who, as things stand, is finding it untenable to be able to afford a home and maintain a home, and therefore renting, and the fact that you don't have the ancillary costs that are attributed to owning a home, i.e. property taxes, which have also risen, as you know, and other costs associated with being a home owner than a renter. You're seeing a lot of would-be first-time buyers opting to rent than to buy until their disposable income situations become such that they are able to, firstly, qualify to buy a home, and secondly, not only afford the cost of servicing the debt of buying a home, but the costs associated with actually owning a home.
Okay. Renault has reported a 9% increase in annual global sales volumes for 2023, returning to growth after 4 consecutive years of decline. Help us make sense of the performance.
I think I'd rather talk about Lamborghini. I'll go back to Renault. And the reason I want to talk about it is that I think the surprise is that for the first time, they actually sold more than 10,000 vehicles in 2023, which would be a surprise in light of what's happening in the global economy. And obviously the business coming out and saying that they're actually very proud of the success of one of their models, which is the Urus SUV, which I think some of us have seen in the streets of Joburg and the likes. Lamborghini has in recent years expanded its output, relying on solid demand from obviously wealthy car lovers. The car maker is actually a subsidiary of Germany's Volkswagen, and they've delivered very strong numbers on their sports cars and the SUVs in 2023, which was quite significant and a robust increase from 2022. And if you look at Ferrari, which is their rival car manufacturer, they're only releasing their 2023 data later in 2024, but they've also said that they've managed to ship many more cars, about 13,200 more cars in 2022. So I think this speaks to the resilience of sort of the higher end of the market, and the fact that people who do have that type of disposable income are still spending on luxury goods and high-end cars, to be precise.
All right. Thank you very much for your time this afternoon.